From Washington, D.C., this is Middle East Focus.
Hello, and welcome to Middle East Focus, a weekly podcast on regional affairs and U.S. policy produced by the Middle East Institute in Washington, D.C. I'm Karen Young, Senior Fellow and Director of the Program on Economics and Energy at MEI. And this episode, we're talking about sustainable finance with two experts in finance in the region. We've got Lama Kiyasseh, who's an investment officer at the International Finance Corporation based in Washington, D.C., and Lina, Osman, who's head of sustainable finance for Africa and the Middle East at Standard Chartered Bank based in Dubai. Welcome, Lama and Lina. Thanks for being with us.
Thank you for having us, Karen.
I was hoping that we could start, if you could just tell us a little bit about what we mean by sustainable finance. What is this category driving so much investment and demand from investors? You know, we see the ESG phenomenon. What does that really mean?
So sustainable finance is the process of getting capital to go towards where it matters the most, where we need it to drive environmental and social sustainable growth in order to ensure we address the ESG challenges and issues that we face today. What that means is that it comes in a lot of forms, it comes in a lot of structures, whether it's on the investing side of things and advising clients on how they raise capital from investors, whether it's fixed income investors or equity investors, how they raise capital from these types of investors that are looking to deploy their capital towards mitigating these specific issues. It can also be in the form of financing and structuring lending facilities in a way that addresses certain requirements that are global and market practice and global and market standards as well, and that ensure that there are certain metrics that are in place, whether it's on the use of proceeds or where the borrowing is going towards, or whether it's on setting certain KPIs and certain targets for clients to meet. What it also means is that we kind of structure or innovate in terms of what facilities we provide clients, whether it's on the trade finance, for example, how they mitigate the issues or the challenges they face through their supply chain, and also within derivative space as well.
Lina, can you give us an example of the kind of product or a kind of arrangement you might make to a client that wants help? And what's an example of a kind of new sustainable finance product that a client would come to you and say, can you put this together for us?
Sure, I can give you a couple of examples. So, for example, last year in 2021, we structured a sustainability-linked loan for Majd Al Futtaim in the UAE. What that means, what a sustainability-linked loan means, is that you provide a financing facility to a client, and then you put in place certain KPIs for them to meet. And based on those KPIs or targets, you set these targets throughout the life of a facility. And if they meet these targets, then they get a reduction on the margin. But if they don't meet it, there would be a pricing ratchet over there, which means that they will have to pay a penalty at the same time. So this is kind of one structure that we put in place, which are the sustainability-linked loan type of structures. At the same time, there are also other types of structures like use of proceeds. And use of proceeds is where you put in alignment with the ICMA principles, which are basically principles that outline and provide guidance on what needs to go into a green loan, for example, or a social loan. We structure these transactions in the documentation in such a way to address that these proceeds are going towards specific projects that address environmental or social challenges.
And these sorts of restrictions are fully, at the choice of the company or the entity that's seeking external supports, that's seeking financing, seeking a loan, not mandated by, any government. But Lama, I would like to hear from your perspective. You do work a lot with governments from the World Bank Group and within the IFC. What have governments done to support sustainable agendas? And, what are some examples of sovereign sort of issuances going to market, looking for capital? How do they fit into this sustainable finance category?
Yeah, Karen. So we've seen a few examples of sovereign, or what I otherwise call quasi-sovereign issuances, particularly in the region. And in 2020, we know, for example, Egypt issued its first ever green sovereign bond. At the time, it was valued at $750 million as part of its efforts to carry out their renewable energy projects. So just sort of building off of what Lina was mentioning in terms of just use of proceeds, for them, the proceeds of this sort of green bond was going to be used to finance expenditures related to environment Italy-friendly green projects to achieve Egypt's plan for sustainable development in the areas of clean transportation, et cetera. So sort of building on Egypt's vision of 2030. But that's sort of on the sovereign level. On the quasi-sovereign level, we've seen companies like Saudi Electricity Company as well in 2020, which, as we know, is over 70% government owned, issue $1.3 billion in Islamic bonds to finance their green capital projects. For them specifically, it was to look at smart meter rollout schemes, part of the broader digital transformation strategy that they have going on for the country. So I think it's interesting because there's potential for both governments, but these otherwise entities that are operating within these countries to issue sustainability linked bonds, to issue green bonds. And for example, most recently, we've seen the IFC build out a guidance note that's related to blue bonds, which is now posted on ICMA's website. And that's supposed to help IFC identify projects that are blue bond, specific or have eligible blue bond guidelines. And so I think just given the rise of water stress, for example, in the Middle East, there could be a potential for that ultimately to be carved out as an area for finance in the region.
And Lama, can you just say a little bit more? What is ICMA? Explain to us.
Sure, Karen. So ICMA is the International Capital Markets Association, which essentially represents financial institutions that are active in the international capital markets worldwide. And basically, they aim to provide guidance, support, regulation insofar as capital markets instruments. For example, like we were talking about blue bond principles, but also green bond principles, what accounts for sustainable finance. And essentially, it's used as an authority in terms of how participants in capital markets move forward.
So we're going to talk more about the sort of regulation of these new products and what it means to have access to capital in new ways and to regulate the behavior of firms to access capital at lower prices. But Lina, could you tell us a little bit more about, is this a special opportunity? What is it about this moment that is in the energy transition for corporates in the Middle East, North Africa, or for sovereigns? Is there sort of a new window for access to capital? What's going on?
So I think, Karen, there is a huge opportunity, and being in this part of the world is extremely exciting because there is a lot of activity around, rethinking how we use energy, rethinking how we use water consumption, for example, how we look at the way that we operate businesses. I mean, essentially, being part of this geography in the world, we rely heavily on hydrocarbon to run our GDPs, to give us the growth that we're looking for as a developing nation, specifically in this part of the world. And because of that, this brings tremendous opportunities in how we transition in terms of the different topics that are coming on board, such as the Hydrogen Alliance Group, such as the recent shareholder change in Masdar, for example, whereby now it's owned by a combination of shareholders, Mubadala, ADNOC, and Taqa, who are going to essentially create this clean energy powerhouse. And that brings with it a lot of opportunity for transitioning and attracting the capital into this part of the world and into these specific projects that are going to help not just with transitioning into cleaner energy, but also in creating a just transition. And what that means is we continue to see economic growth, we continue to develop this economic growth, but in a more sustainable fashion.
And on the flip side of that, we hear about greenwashing, right? To be critical. So there's certainly opportunity. There's some real nice synergies happening between firms. But what is greenwashing and what is the risk there?
So greenwashing is the risk of portraying something as being green or sustainable when it really fundamentally isn't. So it's not really serving an environmental or a social challenge, or it's kind of superficial. So greenwashing is definitely a risk. And that's why we have a responsibility here to make sure that wherever we structure transactions, they take into account things like the ICMA principles, for example. When we set KPIs and targets, we make sure that they are in synergy with the company's strategy, that they are ambitious, that they make sense in the grand scheme of things, and are therefore having a real impact on the projects that are being financed or that are being funded. We also rely on third-party verifications, for example, to verify some of these KPIs or these targets when they are met in certain facilities. Separately, Lama spoke a little bit about green bonds. One of the things that we usually have in place when we put together green bonds or sustainable bonds or social bonds is a sustainable finance framework. And that framework articulates the type of projects that would be eligible for a certain type of financing. It dictates where the bond proceeds will go, essentially, and how they will be governed, how they will be managed, and how they will be reported. There will be impact reporting on them as well. When that framework is put in place, there's usually a second party opinion that's provided from an external party. And these include some of the big entities like Sustainalytics, DNV, Cicero, for example, Vigio Iris, or VE. And these provide a second party opinion on the validity of the underlying project or the framework, essentially, that it is good to go, that it can be classified as a green or a sustainable framework.
That's fascinating. And it's sort of like, I suppose, the role that ratings agencies play for debt issuance. But this is a whole new ecosystem of a market driven sort of regulatory framework for evaluating the kinds of products and the kinds of offerings that are happening within sustainable finance. I wonder if you could give us another one or two examples of some interesting kind of financings that you've seen in the UAE or in the region recently.
Sure, Karen. There are a couple of these transactions that are coming out in the market. And the beauty of this market is that we are coming up with a lot of regional and global firsts. So, one of the examples where we are seeing ESG or sustainable finance coming in is on the repo market. So, recently we did a $250 million repurchase agreement basically with the Saudi National Bank. And the proceeds of that repo are allocated towards ESG assets that the bank funds essentially. And we are seeing quite a lot of these now coming into the market slowly. This was the first one of its kind in MENA and Pakistan, actually, and among the first globally of transactions we have seen. We have seen also a couple of sustainability linked structures, such as, for example, the first sustainability linked shipping finance transaction that was done in Oman for the Oman Shipping Company, and a couple of others that are coming up on the use of proceeds. So the ones that I'm talking about are, so Oman Shipping Company, for example, was sustainability linked, while the Saudi National Bank one was a use of proceeds repo. But we are seeing use of proceeds as well, whereby we are labeling certain transactions as green or sustainable in the region as well.
Thank you so much, Lina. That's fascinating. I want to go next to Lama, and let's talk more a little bit of risk to sustainable finance from a public sector perspective. What are you seeing there?
Yeah, so I think it's maybe important to take a step back and understand that governments in the region have been doing a lot to support sustainable agendas for the very basic reason that they're realizing in order to be able to continue to grow and diversify, they have to veer more towards sustainable finance, right? So they have to rebalance risk, growth, long-term viability of the businesses in the ecosystem, like you mentioned, Karen, a minute ago. And so beyond sort of these green agendas and pledges and frameworks that are being set in place, I think I see two main risks, Karen, as it pertains to sustainable finance from a public sector perspective. And the first is that there's likely to be lower demand that's going to emanate from increased rigorous policies on carbon and climate. We're going to see greater energy efficiencies, such as those derived from, say, product improvements or countries and end users switching to cleaner energy sources. So these demand side factors are likely to cause a decline in oil revenues, and sort of notwithstanding the supply side ones will have major implications for the economic and fiscal health of these countries as they undertake these transition investments and embark on these diversification drives, which are often spearheaded by the public sector, while they're also simultaneously contending with lower oil and gas revenues. So that's sort of the first risk. The second risk is, given sort of the, again, overt reliance on public sector spearheading a lot of these initiatives. Now, what happens to countries that have large sort of debt overhangs, or what we sort of see in terms of ratios is the government debt as a percent of GDP. So we know, for example, in countries like Oman and Qatar, they're quite high, but even in countries like Algeria, Iran, Iraq. So these sort of setups where there's already so much debt in the country, and you are contending with sort of decreasing demand on what is otherwise feeding into your budget is probably going to be problematic for some of the countries moving forward.
That's excellent. Thank you, Lama. And I want to ask Lina then, there are ways to sort of mitigate risk, particularly when we're talking about countries that may be looking at declining fiscal revenue, may have stranded assets. There's something we call blended finance, and that's, putting the private and public or concessional loans together. What do you see happening in the ecosystem there? And how would you speak to sort of other kinds of risk mitigation?
So blended finance is something that is going to play a big part in certain parts of the world where, you don't see as much capital flowing through it. And these parts of the world are the parts of the world that need it the most. And even the projects that are going to be essential for the energy transition story, there are quite a lot of risks that come with it. So, for example, is it commercially viable? Is the technology going to work? It's not tested. There is a lot of credit risk. Are there proper offtake agreements in place? Are there enough buyers, for example, of green hydrogen, let's say? So a lot of questions are coming into play. And therefore, in order to direct capital towards these projects that are very important, blended finance is a very creative solution and a very, very important one because it's going to help substantiate or support the credit of a certain project by showing that a certain public side sector is essentially backing up these projects, that there is a huge belief in the system and it being of strategic importance in order for it to take off. There are also other types of markets that are coming up, and these include, for example, the carbon markets. And these are essentially just some solutions that are coming into play in order to further the mandate of sustainability across the regions.
You both have given us so much of an education on sustainable finance today. I really appreciate it. I wonder if you have any closing thoughts or words of advice, ways of thinking about this field as it develops and the real need for the region. Lama, would you like to go first?
Thank you, Karen. So I think when we are thinking through sort of next steps and particularly the impact of the energy transition and how maybe that fits to sustainable finance in the region, I think it's still sort of important to remember that this overdependence on sort of hydrocarbons makes the transition more challenging for countries and for economies because it's necessitating them to essentially diversify their sources of energy, but also their sources of finance. So we need to think about who is within sort of the local, domestic, regional, even international ecosystem that can help provide that financing. And what happens to sort of the local financial institutions that are often maybe crowded out because of their overdependence on government-led projects. So in terms of just final thoughts, I think given the direction towards clean energy, it's likely that a lot of the financial institutions in the region will have to contend with the concept of stranded assets. And that's basically those otherwise recoverable fossil fuel reserves that will remain unburnable. And why that's the case is because they're already exposed to a lot of national oil companies or the national hydrocarbon companies. And so we'll find that they may be squeezed for their liquidity. So I think there will be an overall impact on the financial institution ecosystem moving forward in terms of whether it's able to absorb sustainable finance and disseminate it to the market that needs it for diversification efforts.
That's great, Lama. Lina, if we could turn to you, any final thoughts? What is going to happen in this sector? You obviously are going to see it grow. You're heading up this very big program and department within Standard Chartered, but what do you see happening next? How is this going to change the region?
So, Karen, I think we are up against the greatest challenge of our time. We have a responsibility, but also with a challenge comes opportunity. And I see a huge opportunity for this region. The Middle East basically, or MENA, needs to reinvent itself again. And it has done this before. This is not the first time. With technology coming in and then with oil and gas as a sector flourishing in this part of the world, it is now the time for the Middle East to basically go into the energy transition story. And they are already doing quite a lot. Being part of this story is super exciting for someone like me who's sitting here in the region and watching all the working groups that are coming together, all the government initiatives, whether it's on the public side, but also in the private sector. And this is being done because there is a bigger belief that this is something that needs to be done. And this is something that's going to be left for generations to come. Being on the sustainable finance side of things, it's a huge opportunity to look at how we finance these projects. As we expect our clients to think about different ways of running their businesses, we're also thinking about the different ways that we can create structures that cater to this new way of working, if you like. And I'm really looking forward to what we can do in this part of the world.
It is exciting indeed. And I am just especially grateful to both of you, to Lama and Lina, for explaining some pretty complex topics that maybe some of our Washington audience don't understand very well or hear about very often. So we're grateful for this. Our time is up today, but you can continue to follow the work of the Middle East Institute and our Economics and Energy program at our website, www.mei.edu, and hear from Lama Kiyasseh and Lina Osman, I hope, at another session. Thank you so much.
This has been a presentation of the Middle East Institute. To support MEI's programs and podcasts, please donate at www.mei.edu. Thank you for your support.